Okay, the buying climax. This is again my second favourite short signal after end of a rising market and after we see no demand. So you see this like you see the end of a rising market. Now it's an up bar. It'll have wide spreads, not narrow, closing the middle or the low on ultra high volume. Okay, it's very powerful if there's no old tops to the left, like you're into fresh high ground. The news again will probably be good. As a market keeps on going up day after day, a point will be reached at some time when many traders that have sold prematurely or those that are not in the market just cannot stand the constant higher prices. And the frenzy gives the trading syndicates and market makers a golden opportunity to unload large amounts of stock at high prices without their activity resulting in lower prices. This marks the high point of the market. So, British Airways again, Philip, one of yours. I think you like this stock, don't you?
Not particularly, actually, but it's very good on the principles.
Can you talk us through ABCD and just say exactly, I mean, I can see where I'd short that, but just talk us through what we see and what happens here.
We could actually do a seminar just on British Airways stock,
yeah,
I think.
We could.
Well, at A, you've got an up bar. The important thing is there to remember that you've got an uptrend behind you.
Mm-hmm.
At A, you've got an up bar. You've got a big increase in volume. That's pushed right up into certainly very high, possibly even ultra high there. It's closed off the highs. The next bar's down, so that confirms that there's weakness.
So let's just clear that. This very high volume up behind, the next bar's down, so that confirms the weakness, yeah?
Yes. And the market then starts to move down. We get to B, and we've got hidden, what looks like, I'd say it's a hidden up thrust in there.
Yeah, it is, yeah.
You've got an increase in volume on that, so what's happened there, the market's pushed up at the open. There's been some selling come in, which has pushed it back down. 2 bars before that, actually, you've got some no demand.
Mm-hmm.
The following bar after that, the one before B, is also showing weakness because it's a narrow spread up bar closed in the middle with an increase in volume.
Mm-hmm.
What's happened there, the professionals have shown on the previous bar they were not interested in the upside with the no demand, and it's obviously been marked up somehow on the next bar, and they've used that to do a bit of selling, and then they've sold again on the upthrust. So there's certainly some weakness in there.
Oh, sorry. Oh.
Then we've got down bar on reduced volume. Now you notice the market's starting to go up towards point C. It's creeping up, trying to creep up, and look at the volume at the bottom, how the volume is just falling off all the time. There's no interest in the upside whatsoever.
Well, you can see that it's been marked on the chart. Look, as it's going up, the volume's coming off. A question from Andre says, on this example, if the next bar on A is a down bar,
yes,
okay, which it is, but it has low volume, is this still weakness or is it testing the volume? Well, in fact, I'd say the volume's still pretty high on that down bar, actually.
It is. Had that been lower volume, it would be a test, but the following bar would mean it was a failed test.
Which we're going to talk about.
Which in itself is a sign of weakness.
Yes, which we'll talk about when we get to testing.
Yes.
Yeah. So now it's too high a volume to be a test bar.
Far too high.
Yeah, and again, if you think you've got absorption volume and you think you've got a successful breakout, you can put your buy order in above here, but the danger is, and I'll warn you all of this, they'll often do that and use an upthrust it's a false breakout. And I usually wait for the uptrend to take off a bit and then look for a retest before, as we'll see, in a sign of when we see a serious sign of strength coming in at this price level, it'll be a low volume down bar at the top of A. But when we get to the signs of strength, we'll be able to show that. Philip, what is the significance of the spread in end of a rising market versus that's a good question. That's a very good question, actually. What is the significance of the spread or range of the bar when you're comparing it to the end of a rising market, which is a narrow spread, or a buying client, potential client, climactic action, which is usually a wide spread?
When you've got a wide spread, what that's showing you is there is quite a bit of buying coming in, which is pushing the price up, but there must also be quite a bit of selling on there. But with a narrow spread, what's actually happening, if you're looking at end of a rising market, every time, it's like if I got my two hands and had them close together like this, every time a buy order comes in, it pushes it up to the top of my hand. Every time it's then met with a sell order, it's pushed it down to the bottom of the hand.
So it's
hammering between the two, if you like, all the time.
Yeah.
And it can't move either of them any further.
Got you.
So that's an end of rising market. But here there's a bit more flexibility. So there's a bit more when you get a wider range like that, you haven't got quite that significance that you have on an end of rising market.
Now,
so on its own, it's not quite such a strong signal.
Now, point A, says Scott, closed towards the high.
Yes.
Higher up the bar, but actually it closed what we call off the high. It wasn't on the high,
yes.
On that high volume. With the next bar down, you've got to look at the next
That's
bar.
the critical.
You've got to take the two bars in context, Scott, because if you just look at one bar, you see it closed up on the high, but the next bar closed lower. That has to infer that there's selling in bar A, otherwise it would close higher. And the fact that it closed off the high, it would be better. If it closed in the middle, it's more obvious. But in fact, the fact that the next bar, these two bars, are taken into context, A and this bar here, you've got to put the two together, Scott. Don't just take A in isolation, because this bar closes lower after the high volume. And there's another little up thrust there.
And bar A is also gapped up, which suggests there was probably some news on that. It got marked up.
Yeah. So we've summarised the buying climax here. Okay, we've seen the no demand. I had a couple of questions come in. This one was from Morris, and I don't want to confuse the issue here, but I'll read the question and then see what Philip says here. It says, Philip, oftentimes preliminary supply, which is on an up bar, has a climactic buying climax look to it. But then the market is tested and then goes on to tear up to the true buying climax. So do you place any importance on the preliminary supply concept in terms of making sense of the widespread up bars on high volume after an up move? In other words, if it looks like preliminary supply in the background, taking long positions on testing near the bottom of the range.
Well, when you see what looks like a buying climax, this is why first of all we always wait for the next bar to confirm it, because it may just be preliminary supply coming in or preliminary selling. Because you've got to remember, as we've said before, we've got a number of professional groups and syndicates here that are involved in the markets, and they're not all going to sell at once. So when you see what turns out subsequently to be preliminary supply or preliminary selling, that is probably just one or two professional groups selling out before the others. And you'll still see the market perhaps continue to go up after some testing, because the other groups may decide they're happy just to take the market up a bit further. So,
and I think, look, if we look at this summary of where to short, again, we want to be in the downtrend. We want to see evidence that, you can get. We saw it in the sugar market. Morris, go and have a look at the daily sugar chart, and go back to say October last year, maybe I think it's October, and you will see what looks like the buying climax, which does get tested, and sure enough, they mark it up to 30. And I did give a specific setup, which I'll show you next week. I'll actually show you the slide I put together when I did a seminar in Dallas. And the criteria for a short trade was never met. Would you take a long trade with a buying climax? Then no, absolutely not. That could easily come off. So yes, in hindsight, the sugar market went up from 26 to 30, $4, big deal. But now if you're still long there, you're stuck. They've just caught you with the big down bar. So that, I think, answers the question. This is the example, in fact. Look at that. I forgot I didn't put it in there. There it is. There's what I've just been telling you. Buying climax,
for the downtrend,
followed by the test, and it's in an uptrend. So Morris, there it is. There's the very high volume up bar. Next bar is level. It goes up on no demand. Next bar's down. You think that's going to come off. Trending system and trade guide never turn red. And I was supposed to, actually said, I need to break 20, okay, which is the low of this bar. I need to break that and go up there on no demand. This is the... Draw a line across 20, okay, I need to break it and go up on no demand. I never did, on the daily or the weekly. Never happened. We continued to go up, and then this came in. On this week, look, it's a lovely little test bar. Comes down, holds its price, and then look at this bar. Another widespread up bar. Next bar goes up, then we get a bit of no demand, pushed up on an up thrust. More supply hits the market. They keep the price up. The news has got to be good, meaning that there's a sugar shortage. And at the top here, we get to a round number. Professionals love to do this. The herd are involved, and suddenly, wallop. And we've come back down near to 23 now. That's the example there. That's why you trade in harmony with the trend.